Recording in progress.
Good morning, everyone. I want to welcome you all to the Tax Resolution Help Center. My name is May. I will be the one to host for today's session and introducing today's speaker. I will also be coordinating the Q&A chat session at the end of this session. I want to congratulate all of you for taking steps to deal with your taxes from all sources, including income tax, payroll tax, property tax, excise tax, and sales tax, represent a 35% to 60% reduction in your personal savings and wealth. As you probably know, those with 1% of the wealth in this country have experts to help them pay a small percent of tax. Our goal is to help you reduce how much you pay in tax. By educating and informing you on ways to reduce past, present, and future tax expenses. We think you're entitled to live a happier, healthier life by keeping more of what you earn and getting the taxman off your back. Our goal is to provide you good information with the opportunity to ask questions that are important to you. The presentation itself will last about 20 minutes plus 20 to 30 minutes for you to ask questions. I will select the questions and present them to today's expert. If you wish, you can include your first name and your state. That would be great. And other than that information, your identity is not mentioned. The information you are receiving in this session is not specific tax advice. If you want specific tax advice for your situation, you are free to contact today's expert or any of our tax experts at Tax Resolution Help Center. As you know, these group sessions are included in your do it yourself membership fee of $20 per month. If you are not yet a member, please sign up today. We need your financial support. And to better understand what might be on your mind during the session, I might include some pooling questions to ask you. I will then finish with a 5-minute wrap up. Also, a survey will be sent looking for your feedback. And finally, this session will be recorded. So, the topic for today's session is agents, consultants, and other professionals. 5 tips to minimize tax expenses. The tax expert for today's session is Jared Smouth. Jared has been a CPA for over 18 years, where his experience spans state and local governments, nonprofits, individuals, and small businesses by providing accounting, budgeting, financial, information technology, management, pension, tax, and other services. He is a firm believer that taxes are important for our government to function. However, he does not believe we should be paying any more than we should and enjoys helping his clients find ways to optimize their tax situation. With that said, introducing Jared Smith.
Good morning, everyone. I'm grateful to be with you this morning to share some tips on how you can keep more of your money and not give more to the government than you should. As May said, my name is Jared Smouth. That's my full name I have to use. It's on my certificate. I don't like using it all the time, but it's what it is. My contact information, if you have any questions, to contact me later. So the first thing to understand before we move forward is we need to understand the type of tax that we are being assessed, being self-employed. As you may or may not understand, especially if you're just starting out, there's a self-employment tax for those that are self-employed. And what that is, it's basically your Social Security and Medicare times two. When you're a W-2 employee, you have 7.65% of your income taken out of your paycheck and sent to the federal government, and your employer matches that 7.65. So it's 15.3% that is sent to the federal government on your behalf. Being self-employed, you are the employee and the employer, and so you are liable for that full amount. And the key to remember here is that it's obviously not automatically deducted unless you have like to be taxed as an S corp and you have some type of payroll process set up. And so we need to remember that so that we're paying that periodically throughout the year. And then in addition to that, we have our ordinary income tax that everybody is used to. But with being self-employed, if we have a net gain or a net loss, that ordinary income is reduced or increased based upon our self-employment income. For example, if you have other income streams besides just your self-employment, it's going to be added to or deducted or reduced your other income based upon your self-employment gains or losses. There are currently some deductions we get to take for being self-employed. You get to deduct half of the self-employment tax that you are paying. You also get to deduct about 20% of your earnings up through tax year 2025. And again, your total tax liability should be estimated and paid quarterly, so you're not hit with any huge penalty or interest when you file your taxes. The IRS expects us to pay taxes throughout the year if we owe more than $1,000 when we file our taxes. So the purpose of this presentation is to help you understand what you can do to reduce the taxes while you're making money. We want you to keep as much in your pocket as you can, and deduct is what is legally available to you. The first things you need to think about when you're starting up your business, or what have you spent to get us started before you actually hang out your shingle or you open your doors. What are some things that you do to get your business going? You could have market research and analysis. You have organizational costs. Maybe you can engage an attorney if you want, or there's a LegalZoom and all those different softwares that are available to you to do it yourself. You could have capital purchases, furniture and equipment that you need to purchase, and then planning and development prior to starting. If you're going to be hiring staff, you're going to need to train them. These costs may be depreciated or amortized, which means they're spread out over a number of years. The difference between depreciation and amortization is depreciation is associated with a physical asset, and instead of depreciating the whole cost in 1 year, the IRS wants you to depreciate it over its useful life. And that some things have 3-year life, 5-year life, 7 real estate buildings have 39.5 commercial, 27.5 residential. And there are some bonus depreciations that are currently available for us, but are changing with the changes with the tax laws. And amortization is also expenses, non-tangible expenses that are also spread out over a number of years. Office costs, you're going to have rent, utility bills, any internet service, office supplies, printing, web hosting, software, anything you need to run your office. And mention a little bit about this later, but if you work from your home, you'll be able to deduct indirect costs based upon the percentage of your office at home that you use to run your business. But if you're going to be opening an office in downtown or whatever in a strip mall, and you have all these costs to keep your office running, you want to make sure you're deducting them from your income, because your taxable income, because it is being deducted from the profits, because you've had to pay it out. Education, research, certifications. You go to seminars to increase your knowledge in your chosen field. You go to webinars and conferences to network and create connections. Professional certifications that you have to keep updated every year, or or licenses that you have to be able to keep current on. If you subscribe to trade magazines, you have business consulting books, you subscribe to research services. These are all things that you can deduct. And don't forget about the American Opportunity or Lifetime Learning credits. These are for those that are in school. So if you're starting a business while you're going to college or in graduate school, these are potentially credits available to you to reduce your taxes also. Advertising, client service costs. If you're attending conferences, again, to network, events, if you have the trade shows to promote your business, these are all expenses that you could have. Travel expenses, if you're going to visit a client out of state or long distances, you're traveling to these conferences, dining and entertainment expenses. Up through tax year 2022, if you dine in a restaurant, 100% of that expense is deductible. And that was instituted to help increase business to these small businesses in the dining and restaurant industries to help them gain back their business from pandemic issues. If you send out gifts to your clients, those pens, those cups, t-shirts, whatever, those are also deductible. So other expenses to consider, banking, credit card processing fees, financial services fees. If you take out a loan, the interest you pay on that loan is deductible. The principal payments are not, but the interest that you pay on those loans are. If you buy tax software, financial software for your taxes, accounting, and here's the home office deductions. If you use your work out of your home, say you're a sole proprietor, or if you're virtual, a lot of companies these days are virtual, and if you work out of your home, a portion of your housing costs that you spend to run the home can be deducted as the percentage of your office that you use. Professional services, vehicle expenses, in business travel, and then one of the most important things for self-employed individuals to understand is sometimes, again, we may have low overhead if we don't have staff, we don't have employees, if we don't have an office, our overhead could be very low, where our profit margins are very high. And so if we're not putting some of that away into retirement savings, we're going to be taxed quite a bit. And there's some very nice retirement savings deductions that are available to self-employed. So again, going back to the self-employment tax, where you're both the employee and the employer, with that approach, that perspective, you also are the employee and employer in retirement savings. You can contribute to yourself as an employer and receive some nice retirement savings, and also contribute to yourself as the employee to your retirement plans and sock away quite a bit. So the rule of the day, if being self-employed, is if you spent money to make money, it's most likely deductible expense. The most important thing is to keep accurate records, and the best way that I have found to do that is to use software to make it easy. There's many different software applications out there in the cloud. You don't have to download it to your computer anymore. You can use them through your web browser. You got QuickBooks, Wave Apps, other things that connect to your bank feeds. And as long as you use and debit credit cards, pretty much keeps track of it for you. If you're writing checks will come in and be matched also. But if you're just strictly cash, you need to make sure you really keep accurate records of what you spend. But if you're electronically using debit and credit, then connect to the software and it'll pretty much keep track of it for you. You can set up rules in your software to categorize them properly, so it makes it a lot easier for us. as accountants to help you keep track and make sure you have everything you're getting for you. At this point, I'll turn it back over to May for any questions that I may be able to help you with.
Yes, hi, Jerry. Thank you for that. Yes, we do have a question here. This is one of our attendees in Zoom. It's from Hans. His question is, how come sometimes they are called IRA or SEP plans? Are they the same?
So SEP stands for self-employment pension plans, and they're for the self-employed, and you have different rules. An IRA is a type of SEP plan that well, you got individual retirement plans, and so they're kind of a subset of those where you can set up an IRA within an SEP plan. And it's how it's just not necessarily the same, but they are similar in how you set up an IRA to contribute to it through your employer plan. So
Mm. Okay, thank you for that answer, Jared. We do have another question. This is from our viewers in Facebook. Was okay. It's from Anonymous. His question is, I work with another real estate agent on deals. We were thinking of setting up a partnership for this. Will I need to file a different tax return for this, or can we each just report our income from this?
if you set up a partnership, a legal partnership, an LLC, where two of you are members, partners, yes, you will need to file a separate business return, 1065, assuming that's the you set up your business like that. If you set it up as an 1120S, then that's a small S corp, then it's 1120S business return. But anytime you get in together with a business with other people, where it's not just yourself, you will need to file a separate business return, which are due in March. And then those business returns will divide out the profits and losses to each partner based upon their percentage of ownership, which then, and those come on what's called Schedule K1s, and those are what you take to put into your individual tax returns. They're pass-through entities, and there's different. The structures are the LLCs or the PLCs or however you structure with your state. But with the tax returns, there's either a 1065 or 1120S that they become that you file with.
Okay, perfect. Was a long answer, but yes, thank you so
Yeah.
much for that long explanation. But thank you. Yeah, another question. This is the last question. Is this also one of our viewers in Facebook Live? From Anonymous. The question is: I am aware if I have a single member LLC, I cannot do W 2 payroll. But if I have a partnership with my husband for my insurance business, can I do W 2 payroll for both of us?
Again, to as if you have okay, so if you're both partners, you cannot be a W-2 unless you set up you elect to be taxed as an S corp. Because because then it's a business and you're an employee of the business being considered that way. Being partners do not get W-2s. You get
Mhm.
the K1s, you get the self-employment, and depending on your level of involvement, it sounds like if you're both actively involved in it, then your income should be taxed in the self-employment. It's not a passive activity for you guys.
Mhm.
Um, so hopefully that answers your question.
Yes. Okay. Well,
You
thank
can
you.
have,
I'm
so let me
sorry.
go back. If you have employees, you can set up a payroll system for your employees being an LLC, definitely, but being partners, you don't, that's not how it works for partnership income.
Mm, okay. All right. Well, thank you so much for that answer, Jared. Anything else that you want to add before we end our session?
No, it's been a pleasure, and look forward to seeing you guys again or helping you in any way that I can. Have a
Mm,
good day.
all right. But anyway, Jared, just to wrap things up, then I guess the bottom line question is that, what is the best way to start up a business? So if they're new, what is the most fundamental that they need to do first?
Well, you need to do some research and figure out there's a lot of things that you want to consider. If you're passionate about what you're doing and you're excited about it, I think the most important thing is to have a business plan in place, right? Put it down on paper, kind of think about it, and map out the steps and get some advice, get some help. Talk to somebody who already in that industry. Ask for their lessons learned, things that they may have uh, made mistakes on, so you can avoid them. Mistakes are important to make because they help you learn, but you can also learn from other people's mistakes. I think it's important to learn from other people too.
Totally agree on that. So, one more thing is that, is it practical then for them to get an advice from a tax expert?
Yeah, I think it is. It's important to understand what your what your tax liability is going to be. Some of my clients, I have this lady that I'm helping that she started a dog grooming business and she's doing fairly well. She's increasing her income, but when I started helping her about a year and a half after she'd already started, and she was not aware of the self-employment tax, and she was hit with a fairly big tax bill that has kind of paralyzed her a little bit mentally and has kind of stressed her out quite a bit. And so we're trying to get help her get past that and deal with the past, but also plan for the future and set money aside for taxes. But so yeah, I think it's important. If you don't understand it yourself and you have questions, it is important to seek some advice from an expert.
Awesome. All right. So there you go. So that is the most wise then decision, to get a tax expert to help you out with your business. And I want to thank you, Jared, our speaker for today, for sharing your knowledge and giving us your real life examples on this session. Truly appreciate that.
You're welcome.
All right. Well, thank you and have a wonderful day.
You too.
All right. I want to thank everyone for joining our session for today. And I hope you have learned a lot. And if you have further questions, you can contact directly our tax expert today. Um, you can review this session through our Facebook Facebook channels, our YouTube, and other platforms. Okay, and thank you. Our goal for today, our goal is, our commitment is to help you reduce your taxes and increase your wealth. We do this with the TriTax method: FDIY, do it yourself; DIT, do it together; and DIA, do it all. Three methods, one solution: reduce stress from no IRS or state tax debt and a happier, healthier life. If you are not yet a member, please join for less than $20 per month. We need your support to continue to offer more of these sessions. Since it is now tax season, we have many sessions to help you do a better job of doing your taxes yourself. And of course, if you want help, we have a team of experts who can do your tax return for you. Please check our website at taxresolutionhelpcenter.com, and please join as a member today for only $19.95 per month. Again, thank you all for attending our session, and see you all next week.